For a long time, Bitcoin has felt like something meant for other people. Early adopters, tech insiders, or gamblers with a high tolerance for risk. For regular people, those with jobs, bills, families, and limited time, it has often seemed confusing, dangerous, or already too late. That perception is understandable. Bitcoin is volatile, constantly debated, and often discussed in extremes. But the real question isn't whether Bitcoin is perfect or risk-free. The question is whether it deserves attention at all from regular people trying to understand the modern financial world. Bitcoin exists because of a larger shift that has already happened. Money is no longer just physical cash or numbers printed by governments. It is digital, global, and increasingly abstract. At the same time, trust in traditional financial systems has weakened. Inflation reduces purchasing power. Savings accounts often lag behind rising costs, and many people feel that the system is harder to navigate than it used to be. Bitcoin emerged as a response to that environment, offering a system that operates independently of central banks and governments, with a fixed supply and transparent rules. One reason Bitcoin continues to attract attention is its long-term performance. Over its lifetime, Bitcoin has been one of the highest returning assets ever recorded, outperforming stocks, real estate, gold, and bonds by a wide margin over comparable time frames. This does not mean it has moved smoothly or predictably, far from it. But when viewed across full market cycles, its growth has been historically unmatched. This track record is a major reason Bitcoin refuses to disappear, despite repeated claims that it is finished or irrelevant. Scarcity plays a central role in this discussion. Unlike traditional currencies, which can be expanded indefinitely, Bitcoin has a hard cap on supply. That cap is enforced by code rather than policy and cannot be changed without broad consensus across the network. As awareness and participation have grown over time while supply remains fixed, Bitcoin's value has historically adjusted upward across cycles. Many observers argue that this dynamic, finite supply meeting expanding global demand, is what continues to underpin its long-term case. When viewed from this longer perspective, some make the argument that Bitcoin may actually be one of the safest long-term assets to hold, despite its short-term volatility. Zoomed in, Bitcoin looks chaotic and risky. Zoomed out across a decade or more, its price history appears remarkably consistent in one direction. Because it is scarce, globally accessible, and not tied to the performance of any single company, government, or economy, proponents argue that Bitcoin carries a unique kind of long-term resilience. In that framework, appreciation is not seen as speculative hope, but as a logical outcome of supply constraints interacting with continued adoption, though never without uncertainty along the way. Bitcoin's history is defined by cycles. It has never moved in a straight line. Periods of rapid expansion are followed by long, uncomfortable drawdowns where sentiment collapses and confidence disappears. These downturns are often where Bitcoin is most heavily criticized, and also where long-term narratives are tested. Rather than signaling failure, these cycles have so far been part of how Bitcoin matures, resets excess speculation, and continues evolving. This cyclical behavior is also why extremely high future valuations are often discussed. Some analysts and long-term observers believe that if Bitcoin continues to function as a global digital asset with a fixed supply, outcomes that once seemed unrealistic, such as a price reaching $1 million per coin, cannot be dismissed outright. These are not predictions or timelines, but thought experiments based on how scarcity, monetary expansion, and adoption have interacted historically. None of this removes risk. Bitcoin is not a savings account, a paycheck, or a certainty. It can experience sharp declines, extended periods of stagnation, and intense public skepticism. Anyone paying attention to Bitcoin must accept that uncertainty is part of the asset itself. Understanding that tension between long-term structure and short-term volatility is essential. What Bitcoin ultimately offers regular people is not a promise, but a different way of thinking about money and ownership. It allows individuals to hold an asset directly, without intermediaries, across borders, and on a network governed by transparent rules rather than changing policy decisions. For some, those properties matter deeply. For others, they may not. For regular people, the real value in Bitcoin may begin with understanding rather than participation. Learning why it exists, how it behaves, and why it has delivered such extraordinary historical returns provides insight into where money and technology may be heading. Even choosing not to engage becomes a more informed decision when it's based on context rather than fear or hype. Bitcoin does not demand blind belief or outright dismissal. It sits in between, an evolving experiment that has already reshaped conversations about money and continues to challenge assumptions about value, risk, and time. For regular people navigating an uncertain financial future, simply paying attention to that experiment may be worthwhile in itself. If you found this video educational or helpful in any way, please like and subscribe to the channel. I post new content regularly.